Hey traders, Raghee here, and what I'm going to show you in this video is a strategy that we use in the chat room around headline events, data-driven volatility. And in this case, we're going to zero in on the crude oil inventories release. Now what you see on this chart, and it might be a little busy at first, but just focus on these red and green zones to the north and south of price action. These are historical volatility-based support and resistance. And this is how we use a strategy or set up a strategy called first come, first serve, using these historical zones. So I'm going to show you what this looked like right at the release. And what you see right here is that the market just shot up after the EIA crude oil inventories number came out. Now we're still sitting and waiting for the first part of the zone that we see reacted to. So here's the event, here's the zone. That's the first place that we went to. That was the reaction to the number. That is a short. Now let's go back to how that basically went. Moving lower, lower, lower. That was a quick short on what we call a first come, first serve. In other words, the volatility surges higher. We take advantage of that drive higher by fading it or shorting it in a historical price range validated resistance zone. And then it happened again, by the way. So here we have opportunity number one, and here's opportunity number two. And you can see both went down lower as the market exhausted in those zones. So again, the whole setup is predicated on the fact that there are oftentimes overreactions or much more intense reactions that don't necessarily have follow through for much more than a few moments or even a few minutes after the release. But rather than randomly, which is what a lot of traders do, rather than randomly fading and then having to take heat or even worse, getting stopped out, we wait for a specific zone that's already highlighted on our chart, based again on historical volatility. And those two, this is at the time a live capture of the setups that I was taking. So there's our first opportunity, our second opportunity, and then you saw what happened afterwards. So again, think about those types of events that we get every single week. And as a day trader, think of the advantage that you have by being able to identify these zones and react to them in a way that you're much more assured, based again on historical volatility, that prices could stop and reverse. And that's exactly what we saw here on crude oil with the release. So wait for the event and then react afterwards in one of those two zones. I'll see you in the next update.